Good morning, ladies and gentlemen. It's my pleasure to welcome you to this continuation of a wonderful partnership that the Business Council of Westchester has had and continues to have with the Small Business Development Center, and especially with Tom Morley, their director, who is right on top of every opportunity for businesses, not-for-profit organizations, and everyone to access dollars and to do it as efficiently and painlessly as possible. And today, this Shuttered Venue Operator Grant really hits close to home, as I know that many in our audience today, unfortunately, have empty chairs there. And as Tom has indicated, and we want you all back. We want you all to stay alive. We can't wait to be back in those chairs. And today we are going to learn about some funding that's available to make this happen. It's my pleasure as the president and CEO of the Business Council of Westchester to introduce Tom Morley, the director of the Westchester Rockland Small Business Development Center. Tom?
Thank you, Marcia, and thanks to the Business Council for being such a great partner with us and for recognizing the importance of arts and presentation arts to our communities, our culture, and to our economy, and for helping us to get this information out to folks who can use it. We're going to jump right in today, folks, such that we can kind of get through as much as possible and have some time for some questions and answers at the end. So the Shuttered Venues Operator Grant, SVOG, there's $15 billion available. Sounds like a lot of money, but don't forget this is national. There's going to be a bunch of details that we're going to go through today. There is a copy of the presentation available from the Business Council. So don't worry too much about taking too many notes. Okay, let's jump right in. In terms of eligible applicants, I can't speak this morning, too much snow yesterday, I guess, may qualify for grant amounts based on your gross earned revenue. Gross earned revenue differs in nonprofits from other types of revenues. So, you know, in your specific case, we may have to go through and help you figure out which number is the number for you. So the eligible entities may be live venue operators or promoters, theatrical producers, live performing arts organization operators, museum operators, motion picture theaters, talent representatives, and entities of these types that are owned by state or local governments, like museums, historic homes, are also eligible to apply, as are government-owned entities acting solely as a venue operator or museum, etc., and not including other types of entities. So a city park and recreation department that operates a bandstand, along with a bunch of nature parks, would not qualify as eligible, primarily because of the nature parks. Subsidiary businesses owned by an eligible entity that also meets the eligible requirements on its own rights will also qualify as eligible, but will be considered under the affiliate rules. The affiliate rules under SBA essentially say, they actually get very specific, but essentially what it says, whatever the limit for one entity is the total limit that will be available for all affiliated entities. So if you've got 5 theaters, each one may be separately incorporated, but as the 5 theaters, you could not get more than the $10 million maximum that's available in the program. And you also have a bunch of disclosures to do. So if you do have affiliated entities, just give us a yell or give the Business Council a yell, and we'll get you a more specific answer. An entity needs to have been established prior to and have been in operation prior to February 29th of 2020. Why they picked the 29th, I don't know, because most other SBA programs have been based on February 15th. If your entity was not in business in 2019, but was fully operational on February 29th, you're eligible to apply. And you have to show a required level of revenue loss. There are some alternative methods for demonstrating revenue loss that SBA is using. And we can help you go through that if you fall into that situation. If you were not in operation in 2019, but you were in 2020, you're going to have to demonstrate a revenue reduction of not less than 25% between the first quarter of 2020 and the second, third, or fourth quarter of 2020. This is also where it gets a little bit tricky. If you applied for and received a Paycheck Protection Program loan in 2020, you're eligible to apply for the Shuttered Venue Operators Grant. If you cannot receive a second draw Paycheck Protection loan and the Shuttered Venues Operators Grant. For some folks, you may have to look at and see which program is going to make the most sense for you economically. So the cutoff date for that is December 27th. So if you apply for a first or second draw loan on or after December 27th, you cannot apply for an SVOG. You cannot apply for both and then decide which one you want to do. For example, if you applied for a PPP, you would have to withdraw that application prior to a decision and then look at doing the Shuttered Venue Operators Grant. One of the requirements in the program is the relative permanence of an exhibit space. So for example, a venue with a multi-purpose room and movable seating is not eligible to apply because the Economic Aid Act specifically requires fixed seating and does not allow for temporary, removable, modular, convertible, or other non-fixed seating arrangements. As such, eligible entities required by the Act to have fixed seating can't meet that requirement. If you've got outdoor fixed seating, yes, you're eligible to apply. However, drive-in movies do not qualify. Is a mobile entity, we'll look at some of these as questions, is a mobile entity with no fixed performance space eligible to apply? No. Among the primary requirements is that a venue have defined performance and audience spaces. If a particular venue like a circus, a fair, entertainment business that provides talent at weddings or parties cannot meet this requirement, so therefore it's not eligible to apply. As you mentioned, drive-in theaters are not eligible to apply because they have to have at least one auditorium with a fixed motion picture screen and fixed audience seating. Okay, there are some things that disqualify an entity from applying. If it doesn't have a place of business located in the United States, does not operate primarily within the United States, and does not make significant contribution to the U.S. economy through payment of taxes or use of American products, materials, or labor. I'm not sure how that would be interpreted in terms of making a significant contribution to the U.S. economy if you're not taxable. If you were not in operation on February 29, 2020, if you received a PPP after December 27th, if it's part of a publicly traded corporation or is majority owned and controlled by a publicly traded corporation, if it presents live performances or sells products or services of a prurient sexual nature, if more than 10% of your 2019 gross revenue came from the federal government, other than disaster assistance, you're ineligible. If you own or operate venues, theaters, museums, or talent agencies in more than one country, or if you operate in more than 10 states and had more than 500 employees as of February 29, 2020, you're not eligible. Museums that are partially funded with state dollars are eligible. A museum that received CARES Act funding is also eligible. Is a wedding event or venue eligible to apply? Not likely. The problem being is that you can't meet the multiple requirements for the sale of tickets, promotion of events to the public, defined audiences and performance space, lighting, sound, things of that nature. Sports stadiums and venues are not eligible to apply because sports is not considered a form of performing art. A stadium that does exclusively concerts or some such thing conceivably would be. A restaurant that features live music is not eligible because the principal line of business is restaurant operations rather than live venue operations. Dinner theaters may or may not be eligible to apply, depending on the principal activity of the business. Again, that's going to be a case-by-case kind of thing. Performing arts centers owned or operated by a government or a state college, as a college, may be eligible to apply. State government-owned entities are eligible. A company that uses 1099 contractors for performances, that sort of thing, is eligible to apply. Payments made to 1099 contractors are considered a cost of doing business, so you're fine. We hire a lot of independent contractors for events. As a subsidiary service provider for live venues and events, does that fit the talent placement eligibility? No, it does not. It defines a secondary service provider, and secondary service providers don't meet the eligibility definition. Okay, theatrical production management businesses with revenue generated by production management may be eligible to apply. The operative thing there is may. Theatrical producers are eligible, sometimes even if less than 70% of the revenue is coming from cover charges or ticket sales. The principal business activity has to be the production of tickets for public purchase, averaging not less than 60 days before a performance date. So that leaves out last minute ticket sales places. Are talent agencies eligible if they book actors at live venues but does not actually operate a live venue? A talent agency may be eligible to apply if 70% of its operations is managing bookings and representing performers who appear primarily at live venues. If it's less than 70% specifically for that activity, that business activity, it is not eligible to apply. Okay. So we talked about what some of the eligible entities are. So just to sort of summarize, live venue operators, promoters, theatrical producers, performing arts organizations, museum operators, zoos, aquariums. In some cases, there's some special criteria for those, so we'd have to pay attention to that. There is the revenue reduction requirement that applies to everybody that would fit any of these eligibility requirements. Sorry, it's early in the day. I'm speaking poorly today. And let me go back one slide. The last note on the slide before, this program is being run by the SBA, not something like NEA, National Endowment for the Arts. Be prepared if you're approaching this as a nonprofit, as a cultural institution. You're dealing with an agency that deals with businesses, that doesn't generally deal with arts. Just be prepared for that, because when we get over to slides like this, where we talk about business entities owned by an eligible entity that also meets the eligibility requirements, with SBA, rules like this are very hard and fast. They don't have a choice. If you were in operation on March 1st, they're going to say, no, you weren't in business on February 29th. It really, in many cases, comes down to that black and white decision. So just be prepared for it, that's the folks that are controlling this program and operating the program. You also will be required to document an awful lot of these things. Have copies of any certificates of incorporation, 501c3 acknowledgments, if that's applicable in your particular case. The documentation for this is probably going to be fairly extensive. Okay, so some of the definitions of the program are very specific. Others do have a little bit of gray in them. So the principal business activity is defined by the distribution of an entity's receipts, employees, and costs of doing business among the different lines of business activity. Where might that make a difference? Let's take a museum that has a planetarium that's got fixed seating. The museum is one line of business. The planetarium would be another line of business. There would be costs associated with one and costs associated with the other. If they are separate entities within the same parent, that's where we're going to get into what those principal business activities are. Majority ownership is defined as, because this is a definition that spans SBA and a bunch of its other lending programs, that 51% of the ownership interest in an entity, regardless of legal structure, are held by a single individual or entity. So if a single individual or entity owns 51% or controls 51%, that's the majority ownership. In doing the economic injury disaster loans and paycheck protection loans for the 501c3s and other nonprofits, one of the questions that came up regularly was, why do I put my name on it? Because generally the executive director or board chair, there has to be a name. SBA can't deal with something that does, even though technically 501c3s don't have an owner, SBA cannot deal with something that doesn't have an individual in a responsible position. So that's going to apply in this case as well, that someone is going to have to be named in the application. Size regulations are going to be subject to SBA's garden variety size regulations. That's the number of employees. 500 employees is the rule of thumb. 300 employees is one of the new rules that they're using this year on some other stuff to push more pandemic assistance to smaller businesses. If you have a question on that, just get in touch with the business council and we'll get you a specific answer in your situation. Fixed seating. Fixed seating is defined as being permanently fixed to the floor or ground. Like, that's the extent of the definition. If it's bolted down, it's fixed. Does your seating have to be 100% bolted down? No. I mean, if you've got a few rows in the front that can be orchestra pit, can be performance space, can be whatever, that's okay, because the rest of your seats are fixed. Regular programming is a bit of a different definition. SBA is defining regular programming to mean programming provided on an ongoing and near continuous basis, average of at least 4 times per month over the course of a year in a qualifying theater, lecture hall, or similar venue. It's one of those things, it's a definition that pretty much makes sense. If you've got regular programming, you're doing things on a routine basis. You're not performing twice a year. You're performing, well, in this case, at minimum 4 times a month. So you have to average 48 performances, presentations, events, etc., in the course of the year. Cover charges are another fee that is an eligible part of gross earned revenue. And SBA is defining cover charges to encompass front door entrance fees, food or beverage minimums, or other similar charges required to gain admission to a venue, whether collected via ticket sales, additions to a ticket purchase, or direct payment. Again, if you've got a specific question in your circumstance, get in touch with business counsel and we'll get an answer to you. That might be an issue for some folks that have a membership that includes some number of performances or includes receptions prior to a performance, discussions after a performance, that sort of thing. So, in your case, we may need to do a little more homework and find out specifically what the case is for you. Okay, the application isn't out yet, but in performing arts, rehearsal is always important. A couple of things that we do know at this point in time: you must have a DUNS number. A DUNS number is not your EIN. It's a number that's actually issued by Dun & Bradstreet under contract to the government. You also must be in the system for award management. You must have a SAM number. For some folks that have been receiving federal support, they may already have a SAM number. Again, it's important that you have that. It's a requirement of the application. It takes approximately a week to get a SAM's number. So if you do not have a SAM's number because you have not been receiving federal support in the past, start the application. You can do it online. Again, reach out to Business Council and we'll get you specifically the information that you need to do that. If you don't have a SAM number, your application isn't going to be processed. Again, this is SBA, it's the government. Some things are black and white. That's one of the black and white pieces. Have all of your data and financial statements ready. Have your operating statements and your last 2 years of tax returns available. Even though the app isn't out yet, we're pretty sure you're going to need that amount of information for it because you're going to have to do comparative data. Keep in mind, this is the government. They're not artists. They don't understand your business. They don't have to understand your business. They have to look at an application and check boxes on it and say, okay, yes, this is good. Yes, this is good. Yeah. Oh, no, this one's not. Goodbye. So again, shift your mindset a little bit. So all the financial identifying status, ID info, personal info, if you've ever done a grant application, this will likely be as complex as that, minus the narratives. So minus the great concept, the great idea that you're getting the grant support for, this application is going to be at least as complex as a grant application. Whoops. Okay, how can you use the funds? The good thing is the funds can be used for virtually all operating and ordinary expenses, including payroll, rent, utilities, mortgages. You cannot prepay a mortgage. So you can't pay a mortgage now with this money so you don't have to pay it later in the year. That is not permitted. You can pay existing debt that's already in place. You can pay for personal protective equipment for employees, for attendees, for performers, for the space. You can put sneeze guards up on snack bars, things of that nature. That qualifies. Leases that were in place on February 15th of 2020. A lease entered after that, again, it's not going to qualify. That's a very black and white decision for SBA. You can pay for insurance. There was one interpretation that already came out that was pretty good. If you've got donors that have lent money to the institution because of the pandemic, that is a debt that was not in place earlier that could be paid back. If the debt was initiated with the entity because of the pandemic. Again, get in touch with the Business Council. We'll get you a specific answer in your case, but in most cases, that would be allowed. So if you had to pay some other bills or close the doors or lose the building kind of thing, and a board member or supporter lent money to the entity, that can be repaid from this money. Some of the disallowed expenses include buying real estate. You can't expand using government grants. Loans made after the February 15th of 2020, except special circumstance loans. Some commercial debt, if you have a credit line already, may or may not be. It depends on a lot of other specifics. So get in touch again with Business Council. I hate to keep harping on that, but it's some of the differences get very granular. So we'll take a look at that very specifically. You can't make investments with it. Now, that does not prevent you if, for example, your entity uses common fund in New York or some such thing to maintain cash balances. That doesn't qualify as making investments. Make sure that if you do have an arrangement with a bank for treatment of cash balances, make sure that the account is always considered what would be considered under financial rules a cash account. Otherwise, you're making an investment. You can't make loans with it. You can't make other contributions to other entities, nor can you engage in political advocacy, also known as lobbying. Even though this is federal money and you may say, but we're requesting support on the state side, just make sure you separate those activities sufficiently and identify the fact that no federal funds were used for the purpose of advocating to a governmental entity. You will be required to maintain documentation, also known as bookkeeping, demonstrating compliance with the eligibility and other requirements of the grant program, And you have to retain all of those records for a minimum of 4 years following receipt of the grant, and retain all of the records for 3 years. It sounds a little bit goofy, but that's a very specific requirement. The reason being is SBA can come in anytime they want, essentially, and say, okay, we gave you this money. What have you done with it? You have to be able to demonstrate what you've done. Now, we don't want to scare folks. If you've got a decent accounting system and you're doing your statements and you're filing your 990s or filing your tax returns if you're a for-profit entity, you're in good shape. You don't have to do anything special for this, but you do have to maintain it, and your stuff has to be in accordance with either GAAP or FASB, very similar, generally accepted principles and standards of accounting practice, and Financial Accounting Standards Board. They write the rules by which accountants have to act when they record financial activity. So if you're using an accountant, you're probably in good shape. Just again, make sure that you're being careful with stuff and that you're maintaining your financial systems. Okay. There's a couple of things that are going to be important to the application. One is the number of employees. That's determined by what SBA calls FTE, full-time equivalent. Easy way to understand that. 2 people working 20 hours a week is 1 FTE, because there was a total of 40 hours worked. That's 1 full-time equivalent. If you've got 3 people working 12 point whatever hours, that's 1 FTE. It's the number of hours worked divided by 40 is your FTEs. It may sound a little weird for some folks. There's an alternate method that you can use in which you can count all part-time employees as 1/2 FTE and count any employee working at least 30 hours as 1 full-time. In some cases, it'll make a difference, and you can pick the method that works best in your application. You don't have to justify why you picked it other than say, this is why we picked this method. You just have to be eligible for using that method. Employees that work less than 10 hours a week need not be counted. I'm not entirely sure how that works if you use an outside payroll provider in terms of recording hours, like use an ADP or Paychex or something like that. You'd have to do a bunch of manual work after, say, well, that person doesn't really count to our FTE number. We're not entirely sure, how that may alter things. It's hard to picture a circumstance in which that would be important to do. Okay, so revenue is determined by earned revenue and gross earned revenue, which may be a little bit different in some entities. So for some of us, that number might be a little bit different. Again, both those terms are, by the way, defined in the law, and they are defined in accordance with common principles of the accrual method of accounting. That's an important distinction. I'm not sure how many folks on our call today are 501c3s versus for-profit entities versus other types of entities. But the accrual method of accounting is the one that's being used. So using this method, only monies that an organization receives from the sale of goods or services are counted as earned revenue. Earned revenue commonly does not include other sources of funds that an organization may receive, like donations, sponsorships, governmental assistance, or returns on investment. Gross earned revenue is the total of earned revenue from the various sales of goods or services, such as admission tickets, merchandise, food and beverage, advertising sales, contracted presentation income. Sponsorships for some people might be in a different category. If your sponsorship includes, some sponsorships are done essentially basically because an entity is being a good corporate citizen and saying, we'd like to sponsor what you do. If, however, your sponsorship includes measurables that you will be listed, for example, here, here, and here, you will get this signage, you will get this. It's kind of like the distinction you sometimes have to make in a nonprofit when someone buys a ticket for dinner and you say, okay, the deductible portion of this purchase is less than the face value of the purchase, it's X versus Y. You might have to do that with a sponsorship, but that might let you include a little bit more earned revenue since you're selling something as part of that sponsorship. Fundraising event receipts. Again, the general principle that applies for tax deductions for donations to charities is what's going to govern this. The portion of the amount an individual pays in connection with a fundraising event, which represents the value of the good or service, can be included in gross revenue. So if I buy a $100 ticket to your annual dinner and you send me a note that says, $71 of that is the value of what I've received, well, then the $71 would be the earned revenue that you received from that, but not the $29. The $29 is a straight up donation. Grant revenue does not count at all. Membership revenue is one of the gray areas. That portion of a membership that represents the value of goods and services provided as a condition or element of membership can be included in gross earned revenue. So for example, if my membership, I pay $500 for my membership, and that includes tickets to 6 performances, whatever. And those tickets to the performances are worth $300 of that $500. That's then your distinction, is that the value, the earned income is the $300. The donation is the $200. So depending on what you do for membership, reach out to business counsel, and we'll get you a specific answer in your specific circumstance. A business that provides talent representation and financial services for athletes and entertainers, is the total revenue your gross earned revenue? Yes, you can include the gross revenue from all sources, but you have to satisfy the requirement that the principal line of business talent representation versus financial services. That seems very much geared toward companies that work with professional athletes, but it may apply to some other folks. And it goes back to that definition. What's your principal line of business? If you make 80% of your revenue for accounting services, then your principal line of business is the accounting services, not the talent representation. So again, it depends on how you're structured. So the other requirement that comes up in this area is the 10% maximum for federal grants and funding. The 10% maximum for federal grants funding covers everything else that you might receive, regardless of the use of the grant funding. So if you've been very successful in deriving federal grants, you're stuck with that 10% maximum. Why they did that, I'm not entirely sure. It seems a little bit silly in my book that if you're a successful cultural arts entity and you've gotten some federal grants, especially in view of the fact that, who was it, NEA last year was basically sending out money. So again, reach out with a specific question. Is rental income from tenants and income from renting the venue for private events counted as earned revenue? Yes, earned rental income from longer-term tenants and from short-term rentals for event hosting are included in earned revenue because they derive from standard commercial transactions for the paid use of the facilities. I realize that sounds a little bit technical. It's not intended to, but that's their wording. Okay. If you have subsidiaries, only the parent has to meet the eligibility requirements. I guess by way of example, so let's go back to our museum with the planetarium. So let's say that the museum operates the planetarium as a separate entity for whatever reason. If that entity is not eligible, that doesn't matter as long as the parent is eligible. So again, in your specific circumstance, that may or may not make a difference. Shared or subsidized expenses have to be tracked consistently with your past practices. Excuse me. and with the applicable GAAP or FASB rules. Which means you can't, at the risk of offending someone on the call, you can't play fast and loose with who's paying which expenses in an organization. They have to make sense. They have to follow the rules. It's not uncommon that there are shared charges, that there's a corporate overhead charge. There's a bunch of circumstances where that may or may not make a difference. If you have that sort of situation where you're sharing or subsidizing expenses among a number of entities, give us a yell and we'll help you figure that out. There is also an interesting limit on the number of affiliates that can receive a Shuttered Venue Operators grant, and they set that at 5. I'm not sure why. I'm not sure how many folks that will apply to. I could see it applying to some folks. There is some specific guidance on SBA affiliate rules. If you're not an attorney or an accountant, I would suggest consulting an attorney or accountant when you read them. If you've got a number of affiliates, because it can make a big difference in how the program will work for you or not work for you. And again, it's a very black and white situation for the SBA. I can point out that since you, in some cases, will have to identify, if you're a 501c3 and you have to identify what they will call on the application an owner, even though the person isn't the owner, and that would be your executive director or chair of a board, that person's business activities are not considered affiliated with the 501c3. Ordinarily, if I own business A and I own business B, they can be completely separate in separate states and everything else. Under SBA's affiliate rules, they're affiliated businesses because of what's called common ownership. Even though they may operate at arm's length, they may, like I say, be totally different industries and everything else. That does not apply here. So if you've got a person that does have other business activities that are unrelated to the 501c3, they will not fall under that affiliate designation. Excuse me. Okay. I know we've thrown a lot of stuff at you and we're trying to keep things to a reasonable time frame this morning. So I wanted to throw up a couple of interesting links for you guys. There is a copy of the presentation that will be made available to folks. So don't worry about writing real quickly or getting the phone out and taking a picture of the screen kind of thing. We're happy to consult with you guys individually if you need it. That's what these links are for up here. This is SBA's documents on the grant and where it stands right now. Keeping in mind, of course, that's likely to change. This is another link for SBA and the program itself. This is the link for the Business Council of Westchester, a great group for you guys to stay associated with and affiliated with. Great source of information. One of the things we've been adding of late to a bunch of our webinars and stuff, beware of non.gov websites. There's a bunch of folks out there who are preying on the fact that we're in a pandemic, preying with an E, not with an A. There's a thing out there called SBAattorneys.com, and they essentially try to mislead the public into thinking that they are somehow part of, affiliated with, or associated with the SBA, when in fact they're not. And they've been sending emails and doing email blast marketing and that sort of thing. I would not be at all surprised, given the fact that there's $15 billion in this program and the maximum grant is $10 million. In other words, there's real money in it. I would not be surprised to see folks that are doing that. So just be mindful of who you're dealing with. Make sure it's a .gov when you're interacting with it. There are some trade associations, like Business Council is a .org. Just make sure you know who you're dealing with. One other bit of advice that we've been giving folks, SBA is sending most email for this and all their other pandemic assistance programs. They're sent from a bulk mail server. The downside to that is that many other email servers, recipient email servers, will look at anything that's coming in from a bulk mail server and consider it spam. So if you've got an application in, or you've been working with someone from SBA on an application or some such thing, make sure you're constantly checking your spam folder. Or, when you see it's, John Smith or Mary Jones from SBA, set that up as a trusted address. We've had some clients on the commercial side of things have missed consequential emails because it was in their spam folder. So just a heads up on that one. And with that, if you folks have questions or some such thing, we'll be happy to try to answer them. If your questions are like very specific to your circumstance, we may say, okay, we'll take that one offline. Or we may say, okay, you send that to Marsha, Amanda, or Odette over at Business Council, and we'll coordinate with an answer for you. I thank you for your time this morning, folks. I know we covered a fair amount of stuff, and a lot of stuff is still unknown in this because the application isn't out yet. But you represent a very important sector of life in this area, and very important sector of economic activity. And I applaud the Business Council for recognizing that, and applaud Marsha for making this available for you guys. So thank you kindly. And if you've got any questions, we'll see what we can do.
Sure, Tom, and thank you. We applaud you for also recognizing this, and the SBA for providing us this resource and the information. We have one question/comment, and if anyone has any others, please put them in the chat or in the Q&A. It says, we have been assured by multiple sources that the fixed seating requirement only applies to movie theaters and museums. Is that true?
I'll give you the best answer I can at this point in time. We will receive what is called official guidance, which is the information on how to interpret the regulations of a program. The Supplemental CARES Act was 5,593 pages. The first guidance document we received was 82 pages. We've received multiple 50 or more page guidance documents since then. We don't have guidance on that yet. That is the direction that it appears things are moving. But as of now, the only written information that we have from SBA indicates that that's a pretty firm requirement. There's been a push to amend that, and SBA does have the flexibility to amend that. So we'll keep you posted on it as soon as we hear something. I do anticipate getting guidance on this program. Hopefully this week, we should have our first formal guidance on it. And as soon as we do, I'll be in touch with Marsha, and we'll either schedule a quick update on this or just get the information out to everybody that was in today's event.
Great. Another person asks, how does this help an artist or talent?
Unfortunately, the Shuttered Venue Operators Grant doesn't, because that's not its intent. An artist is eligible depending on how your income was recorded. They've expanded unemployment eligibility. An artist that reported, let's say, Schedule K income or 1099 income is eligible to apply for paycheck protection. So depending on the income, that would be up to about $8,333 a month for 2.5 months under paycheck protection. With unemployment, since they expanded the eligibility for unemployment, that might make more economic sense for some people than a paycheck protection loan that gets forgiven. And even if the income level was fairly low, one thing I will point out is that if you qualify for $1 of state unemployment, you get the entire federal supplement. That's not indexed in any way. It's not adjusted. So if the state says, okay, based on what you earned, you're going to get $38 from us, you would still get the $300 or $400 or wherever that, I don't know where that ended up finally. You would still get that entire amount. So an independent artist should probably look at their specific situation and see which one makes more sense for them.
Great. Thank you, Tom. When will the application be finalized? When can an organization apply?
If I knew the answer to that, I would know the answer to things like which stocks are going to go up versus down on any given day. We've been hearing from the government that it will be any day now for quite some time. So I do not know what that date is. They haven't set a date by which they will do it. They're starting to get a lot of pressure to like, okay, guys, this program's been in law for a while now. Paycheck protection's out and running. The new idle program's out and running. A bunch of other stuff's out and running. Where's this one? So I expect it will be shortly, i.e. sometime in the next, week or two, kind of thing.
Great.
If you don't hear from us about it, you might like just hear it in the Times or some such thing, or on radio and television news kind of thing before you would hear it from us. Simply because we don't have a mechanism to get out to everybody that quickly. But as soon as it's out, we will make every effort. Yeah, we'll let Marcia and the BCW know that it's available, and I'm sure they'll reach out to everybody that was certainly in today's event.
We will. Any information as to whether a racetrack would qualify, or is that considered a sporting venue?
I'm hesitant to answer that question only because, it would be considered, since racing is not a performance activity, I guess it would depend. And also the other issue that I would think a racetrack would have, generally with SBA, you're ineligible for programs if more than, I want to say, either 20 or 30% of your revenue is derived from gaming activities. And a racetrack probably has a good percentage of income derived from parimutuel betting, which might make it ineligible. A racetrack that was converted to a concert venue or some such thing probably would be. A racetrack that has a performance space that is used for performances of one form or another, independent of the racetrack, that space, if it's a separate entity, would likely be eligible. So I realize that doesn't give you much of an answer other than say probably not. But in some weird circumstances, it might be. So reach out to the business council and we'll try to get you a more specific answer based on your specific circumstance.
Great. It's still not clear whether theatrical general management offices are eligible for the grant. Their weekly fee comes from a show's revenue, which ultimately comes from ticket sales. So I guess the question is, are theatrical general management offices eligible?
There is some guidance on that. It depends on whether that's the principal business activity or not. So if that's the principal business activity, the answer is probably yes. I won't guarantee that, but I would say at this point, based on the description in the question, I would say it's a better than even chance. Yes, it is.
Okay, there's another question on when and how to apply. The SBA site says not yet, but I think you've answered that. We're waiting. Can you clarify the December 27th, 2020 cutoff issue regarding the PPP loan to the organization?
Right. So if the organization received a first or second draw paycheck protection loan after December 27th, they're not eligible for shuttered venue.
Okay.
Essentially what the government generally says, and this, I don't make law, I just have to act on the regulations that implement it. They'll only give you free money once is kind of what it comes down to. And I realize in the arts, that's kind of a weird position to take because you'll get annual grants, you'll get repeated grants, you'll get multi-year grants. This is an SBA program. So this is a business agency's disaster response program. They all tend to be one bite at the apple efforts. That's SBA and FEMA's normal modality in dealing with a disaster. You can get it once. The second draw paycheck protection was a major departure from how they've done things in the past, letting people go a second time to a program. It was a good response to an ongoing situation, so it was a necessary one. But that's a very hard and fast rule with SBA that if you received a first or second draw paycheck protection after December 27th, you can't get shuttered venues. I think the logic they're using on that is that on December 27th, you would have known that shuttered venues was going to be available at some point. And if you applied for a PPP, then you made the decision that that was the better resource for your entity or organization.
Okay, so just to clarify, someone else just asked again, so we can't apply for the second PPP if we want to apply for this grant?
Correct. And a lot depends on your circumstance, which one's going to make more sense for you economically. This is a percentage, shuttered venues is a percentage of lost revenue. So in some cases, it's 45%. Once the program opens, there are actually 3 phases in the first 2 weeks or 3 weeks, I forget what it is, to push the program to the smallest of venues. For the first 7 days, only certain venues can apply. Then some slightly bigger venues can apply, and then it opens up like to everybody. So we do want to pay a lot of attention to when that application does come out. And again, as a replacement of gross earned revenue, if you're going to get 45% of your gross earned revenue as a grant from the government, that may be much better off for some organizations than Paycheck Protection. And since you can use that money to pay your employees, you can retain your employees, you can retain the intellectual capital in your venture. It gives you more flexibility than Paycheck Protection because there's no FTE requirement for it. So if you get the Shuttered Venue grant, yep, there's FTE information that's reported as part of it, but it gives you a little more flexibility to maybe spread that money out a little bit differently amongst the people that are involved in your organization. So I hate to be so non-specific with parts of it, but it's really what it comes down to is what's your circumstance and which version of which program makes the most sense for your situation.
And the question is, Tom, is that gross revenue from 2019 or is that 2019?
Yes, you can use 2019 gross revenue. That's what the basis year will be, or the comparison year will be. And they're looking at essentially what's the difference between 19 and 20. If you made $1 million in 2019 and you made 900,000 in 2020, you've not suffered enough loss to be in the program. If you did $1 million in 2019 and $500,000 in 2020, you're going to get 45% of that $500,000 because that's your lost revenue.
Got it. Okay, I think that's it for the questions. Tom, you've always been so generous in answering questions after a webinar, and just want to invite anyone who has more specific questions afterwards to send them to me. I'm at mgordon@thebcw.org. I will then forward them to Tom and he will reply if he's able to. And this will live at the Business Council of Westchester's Resource Center at www.thebcw.org. I see on the list of participants many accountants and board members and other people that are there to support our cultural organizations also. So we thank you for everything that everybody does. We can't wait to get your portion of the economy moving forward again. And I think what represents really getting back to our regular lives. But in the meantime, everybody, please stay healthy, stay safe, and of course, wear a mask. And we at the Business Council of Westchester are here for you. I just want to put one more word in for a conference we're having this Friday, our Diversity and Inclusion Conference. It's Friday from 8:30 to noon, and you can find more information on that and opportunities to register and participate again at our website at thebcw.org. If anyone here, of course, is interested in becoming a member of the BCW or learning more, please feel free to contact Linda Tyler, our Director of Membership. Tom Morley, the Small Business Development Center, is a great partner of ours. You're a great partner. You're always so very knowledgeable. Thank you so much. Thank you, everyone, for attending. Have a great day.